It's hard to breathe, but that's alright. Hush.
Okay guys, so moving on to risk to reward ratio and kill zones. So this is pretty much how I what it comes to in it. When I say risk to reward ratio and what it means, and my kill zones, so the times I trade. Okay, so when it comes to risk to reward ratio is a metric that traders use to calculate how much they are risking in the market for how large of a reward. Usually traders will set risk to reward ratios of 1 to 3, 1 to 2, or anything along those lines. Okay, so for example, in this case, it is £10 and you have a risk reward ratio of 1 to 2. If you're risking £10, this means you have risked, you'll get back £20 and so on, right? So if you're risking £10, you have a risk reward ratio of 1 to 3, you'll get back £30, right? So essentially, yes, the more you risk, the more you get, but we don't want to think of it like that, okay? Because remember, a lot of people, they only aim for 1 to 3s, 1 to 2s, but when it comes to smart money trading, we can sometimes hit those 1 to 100s, okay? So a strike rate versus risk to reward ratio. So this is the quick table that you can look at, and it's pretty much all there for you. So for example, 1 to 1 with a 20% strike rate, you're going to be a loss. If you're trading 1 to 5 with a 20%, all you need is a 20% strike rate, right? Or if you're trading 1 to 4 and all you need is a 20% strike rate. So out of 100%, you could be wrong 8 times and be right 2 times, still be at break even, okay? So when it comes to kill zones, in simple terms, it just means the times that you are trading. So I trade, these are my personal hours, so between 6 till 11 a.m. in the morning, and then 12 till 3 o'clock in the afternoon. So 6 till 11 is my London session, so I look for those London opportunities, and then 12 till 15, so 12 till 3 o'clock in the afternoon is my New York session, so I look for those reversals or whatever, okay? Now again, I know obviously more time the better, because obviously when it comes to trading, you're supposed to have freedom. You're probably looking at this and be like, well, why the hell are you trading 6 to 11? I thought it's all about freedom. Now, obviously that mindset isn't the best mindset to have, but I understand what you mean, because it's different. It's not a 9 to 5, right? We don't want to be 9 to 5 in this, even though I personally do, because I enjoy it. I enjoy being in the charts. I don't really do this for the freedom. I have a passion for teaching, so I'm constantly on the table and out my desk anyway. So yeah, these are my personal hours. It will be adjusted to you. So if you're from the UK, you'll find yourself getting up at 6 o'clock, and you might stop trading around 10 o'clock, and then you're done for the day, right? I only come on between 12 till 3 because I like trading those times as well. And over time, you can adjust your own trading hours. You might prefer to trade 12 to 3 than you might prefer to trade 6 till 10. So you may like a line in the morning, but that's fine because you can come and trade at 12 o'clock instead, and then finish at 3 o'clock. So you've got 3 hours of work there, and scalp in a small time frame. For example, you get a 1 to 50. That's 50% for the day. It's insane. This way of trading is insane. So with that being said, guys, that's pretty much just my kill zones, the time to trade, and also risk to reward ratio explained. So again, it's just how much you're risking, how large of a reward you're getting. So again, if you're risking £20 for a 1 to 1 risk to reward ratio, you're going to get back £20. Okay, so obviously the higher risk to reward ratio, and this is what obviously smart money trading is all about. However, I don't think of smart money trading that way. A lot of people do, but I think of smart money trading in terms of precision. So it's very precise. Okay, guys. So I'm going to end the video here, and again, as always, I hope you gained value, and I'll see you in the next one.